Welcome back to the New York City Multifamily Podcast. Today we're going to talk about CityFHEPS and Section 8. And I couldn't think of a better guest than Daniel Bernstein, member and head of tax incentives and affordable housing at Rosenberg Estis. Daniel, thanks for joining us. Welcome to the show.
Thanks for having me.
So before we get into the specifics, why don't you set the stage a little bit and tell the audience about just your specific personal practice and why you're uniquely qualified to discuss these government programs and everything that we're going to get into today.
Sure. Happy to. So for 22 years, I've been practicing in the area of New York City affordable housing, new development of multifamily, repositioning of existing residential, now a lot of conversions of office to residential. And they all have interplay with rent regulation. More and more of the programs have affordability requirements for property tax incentives, for zoning bonuses or requirements, and the subsidies that different governments provide for rents of low-income individuals for these apartments have evolved over the years. And so in conjunction with the extreme housing shortage, because New York City has such a minuscule vacancy rate and such a dire housing problem, one of the things you mentioned, CityFHEPS, City Fighting Homelessness and Eviction Prevention Supplement, right? That's what FHEPS is, has been rolled out over the last 5 years and now has a significant effect on keeping people out of homeless shelters and putting them in permanent housing, and also guaranteeing rent payments to the owners of these apartments. It's important. It's next to Section 8 payments. It's exceedingly important.
This program was created in 2020, you said?
Around 2020.
And so what predated this program? Where were these people that are now on the program living? How does that work?
Right. So you've heard of Section 8, right?
Yes,
which
sir.
is a subsidy that is federal dollars routed through local housing agencies, in this case, NYCHA or New York State. And the payments were helpful to a number of people, but it wasn't seen as covering enough people. And so 5-6 years ago or more, the idea of a city subsidized payment, CityFHEPS, came up, and it started small. It was small for New York.
They always do,
150
right?
million or so. But compared with keeping individuals and families in shelters, it was seen as less expensive than shelters for the government and better for the people. And it quickly grew because owners really liked it and the tenants really liked getting out of shelters and getting into permanent housing. And now it's over $1 billion a year. And just yesterday, there was a letter to the mayor, to Mayor Mamdani. And if you look at the header, it's from the Real Estate Board of New York, Housing Works, Women in Need, Bronx Defenders, Trinity Church, a laundry list of institutions in New York City that you might not see all of those names on one request.
Yeah, they're not often in the same sandbox together.
No, but they all agree that this is a good, effective program that should be expanded, assuming the city can afford it, of course, which is up to the mayor.
Yeah, okay. So the impetus, what I'm hearing is the program started because it was more economical to put people that were in danger of becoming homeless from shelters into just normal apartments.
Right.
So now they want to expand that budget. Is this just giving you money from my right hand instead of my left hand? How does the cost compare? Because we're talking about in 2020, I read $155 million for the program.
Right.
And in 2025, over $1 billion.
That's right.
To the program. And with talks of that hockey sticking, how does the financial cost compare or potentially compare to where we were pre-CityFHEPS?
Right. So it's a good question. The cost of having someone in a shelter is more expensive on a per night basis frequently than averaging out one night in an apartment and the monthly
rent.
Right.
This is like paying for a hotel versus renting something on a monthly or annual basis, you're going to get the benefit of like the annualized rate, I guess, versus a hotel rate.
And the idea is now that CityFHEPS is the compensation that the city provides, the amount of the rent that the city pays is pegged to something similar to Section 8. The households that get it are supposed to pay 30% of their income if they're working, if they have income. And, it's all a question of time frame, right? If a household gets CityFHEPS for 1 year or 2 years and then is on their feet and is no longer needs the subsidy, then it's definitely a cost savings over an equivalent period of time in a shelter. If a household gets CityFHEPS indefinitely, the cost is different because, frankly, people don't want to stay in shelters longer term. It's not desirable in any way, shape, or form, and it's not intended as a long-term housing solution. So it's a work in progress figuring this out. It's definitely thought of as a better outcome for people. In New York City, there's a right to shelter, and that's why the city has the shelter system that it has. But permanent housing is better than hotels or better than the shelters, notwithstanding some of the newer ones being built. And I think the goal is to have people in permanent housing if the city can help with the economics.
What I'm picking up on is that is there supposed to be like some time constraint on how long you're eligible
That's right.
for CityFHEPS?
It's supposed to be 5 years, but in practice, I think it's extending longer because it's been very successful and the city has wanted to continue to provide the subsidies for eligible people. I'm not aware of people being cut off at the 5-year mark, but also it's possible organically that people get on their feet and don't need it.
So it's been 5 years.
Yeah.
Right? Is the city kicking anyone off?
It's a good
because
question.
It's their expiration date, if you will?
I'm not aware of it, but I am aware of the city tightening the amount that they'll pay, feeling the constraints of the economics. And so when a coalition of groups like all these nonprofits and Rebney and Trinity Church and what have you are asking for an expansion of the program, the natural question is, can the city afford to give more money to this program? That's something that City Hall and the City Council will have to figure out once they know what revenue the city has from city sources, from the state assistance. But this is all city money, so it's not a question of federal dollars that are coming or not coming. It's really CityFHEPS is a city.
Not even state. It's straight New York City.
It only in the sense that the city overall has a budget, and I suppose if there's less money for the state for this and they have other priorities, they might feel more or less inclined to devote money to CityFHEPS, if they need to pay other employees or do certain things.
And so what are some of the biggest differences between the CityFHEPS program and Section 8?
Section 8, including federal dollars, is a different funding source. They're very similar in the amount of payments they'll make to landlords.
You mean the rent?
The rent, for the most part, and they both have income eligibility requirements, right? You can't get it if you make too much money. You can't use it for an apartment that costs too much. There has to be a sort of fair market kind of question of what's a reasonable amount. And there are several different kinds of Section 8 vouchers, right? There's the portable kind that individuals have.
Sticky ones, right? Sticky vouchers?
Sticky vouchers that go with them. And there's also project-based Section 8, where a particular project is getting, as a whole, Section 8 payments. And those are typically for deeply affordable projects that are often built with city subsidy. Section 8 payments can be for market units or income-restricted units. But what's happening with CityFHEPS is the city is encouraging owners to, when they build new apartment buildings, to put the affordable units into the, that would otherwise go into the lottery, to direct them to folks who are coming from the homeless placement system, coming out of shelters, and give them priority. The idea is that an owner who might otherwise look for a tenant to pay rent, CityFHEPS and augmented CityFHEPS in particular have been paying rents of up to 130% of AMI in recent years, which sometimes new developers of, for example, 421A properties have trouble filling some of those units, finding enough income eligible households. And so we've seen that some of the FHEPS subsidy holders are filling affordable units in new developments because it's in the owner's interest and it's in the tenant's interest. And sometimes those units are harder to fill or keep filled just due to having a high income limit. Getting folks who make 130% of AMI to enter the housing lottery, to go through that process, it's harder.
The AMI in New York that we're talking about, so the audience knows, it's
Right.
what? It's about $100,000 or something like that. So now you're talking about $130,000,
Something
per year,
like that.
roughly.
Right. So if you think of a family that makes around that, maybe a little more for a family of four, they might not want to put their name in the lottery
Right.
to go to HPD's Housing Connect system and apply for an affordable unit and wait during that process and have their income and all their household details checked by the city. They might just want to rent an apartment if they can find one in this market. So there are often buildings that direct all of their affordable units to CityFHEPS.
And how are those rents set? Because we're looking at a lot of these newer construction buildings, specifically in the Bronx, and they're filled up with mostly CityFHEPS tenants. And you're looking at the rents,
Right.
and they're getting $2,700
Right.
for a one-bedroom apartment in the Bronx,
Right.
where the market rent for a cash-paying tenant is probably $1,800, let's say, $1,600. They're paying. We could debate about what the market rent is, but it's a sizable double-digit percentage above the fair market value.
Right. So some of this has to do with some details of the 421A tax exemption program that has mostly expired,
Yeah.
right? That allowed for units that were affordable to be affordable at up to 130% of area median income. And some of it, the city would do an analysis for these projects and say, okay, here's what 30% of 130% of AMI rent is for this size apartment, and could approve that. And then the owner would say, well, I'll take someone coming out of the housing placement system via HRA or DSS with this subsidy because it might provide both as much rent as they would hope to collect under the tax exemption and the security of knowing that the source of the funds isn't dependent on someone keeping their job for the most part. It's largely coming from the city. I think you'll see less of that in new construction affordable housing because in the 485X tax exemption program, affordability limits are lower, AMI limits are generally lower, and the same with the office to residential conversion for 67M, those AMI limits are lower. And so I think some of that example is going to be a limited tranche of buildings that were built started between 2015 and 2022. And the rents that people can charge for affordable units will go down. And so the subsidy payments will go down for future units.
Okay, interesting. So then they'll become closer to the market rent. So here's where my brain is going. If I'm the landlord, a few years from now, let's say your prediction comes true, and I have two tenants. One of them is a cash paying tenant and the other one is a subsidized tenant. Which one are you more likely to choose?
Part of this is that technically there's non-discrimination based on source of income. And so an owner can pick a tenant who can pay more, but can't choose not to rent to a tenant with a voucher who's offering the same rent.
Right.
I think if they're the same, then there are business considerations maybe about comfort with the program or not. And we have some clients who they're very happy to fill as many units as possible with subsidy holding tenants. It's a good plan. It's stable for them. It's predictable. It takes away some of the uncertainty of finding and vetting other individuals. We have some clients who say, if someone wins the lottery, I'll take them, but I'm not going out of my way to have more tenants who have the vouchers per se. It depends also on owners' experience with individual tenants.
Everyone. Some people love it and some people hate it. From a tenant's perspective, I'm curious, if you were a tenant, would you rather be qualified for Section 8 or CityFHEPS? How do you think about the pros and the cons between choosing to apply for both of those programs? And can you do both?
You can't do both, right? You can't have CityFHEPS and Section 8. You're not going to have two different payments both covering your rent. That's not going to happen. But Section 8 has been around longer, is more established. There's a lot more infrastructure for it. CityFHEPS has grown rapidly over the last 5 years, but it's still getting known in some quarters. So it might be the case that a tenant might say, I want the program that has been around longer, maybe.
Because the rents are basically the same.
They're very
right?
similar, right. They're pegged to the same fair market amounts that the city will pay up to after the tenant pays 30% of their rent. So pretty similar.
Yeah.
But honestly, if somebody's in a shelter and they don't get Section 8 for whatever reason, but they get CityFHEPS, they're not often in a position to choose.
Right.
They want to get out of the shelter, placed in an apartment, and become a tenant,
right?
So they can get on with their lives.
From the landlord's perspective, what are the pros and cons just from a compliance perspective, right? Are there inspections and do you do this annually? Is it just once? Or are they kind of comparable in that?
They're comparable. It's the city is going to do an inspection to see that the housing is up to par. And with CityFHEPS, it could be an apartment, it could be a room in an apartment, it could be various types of housing, but the city is going to check it out and it's comparable. It's just how smoothly do the payments come? Is there much of a delay? I've heard different information from owners about sometimes it's hard to get there's a lag in getting the payments to start. Once they start, it's fine. But I've heard these complaints about Section 8 and CityFHEPS in different contexts. So I don't know what is specific maybe to something going on with an agency, the federal government, when HUD is being doged or something. Or
Yeah, this is all about funding.
That's right.
Who's going to turn the faucet off first? That's the one that maybe you would not lean towards, right?
That's right.
That's interesting. And then what about from an L&T perspective, non-payment issues? Because the payments are the same, right? The tenant is on the hook for 30% of their income gets allocated to the rent, and then whether it's Section 8 or CityFHEPS makes up the difference. Is that
right.
Is that a fair statement?
That's fair.
Okay, so if you have a non-payment issue, the tenant doesn't pay their portion of the rent, you elect to take them to housing court to start the eviction process.
How many years do you have?
How many years? Well, exactly. Yeah, this is the problem. And is it, if you're a cash paying tenant, a CityFHEPS tenant, or a Section 8 tenant, is the process and the timeline the same?
It's pretty similar for an owner for bringing an L&T matter for non-payment. It's just that when there's a subsidy being provided, at the end of the day, the tenant is often given multiple opportunities to cure the non-payment, including what are called one-shot payments that the city might provide.
So that's from a different organization than CityFHEPS?
It's a different program technically, because it's not intended to be your recurring rent, but it's intended to be a different way the city is preventing these proceedings getting all the way to eviction. And so you could get through, and I'm not an L&T attorney, but I work with many of them, you could get through a non-payment action substantially only to find out at a certain point that the tenant is paying the back rent through a one-shot, and you've gone through all this process, and then perhaps it happens again. Or it doesn't.
Right. So, this is the complaint that most landlords have that I hear about. If the tenant didn't pay, it took me 18 months to get them through the housing court. They get a one-shot deal. They're back in the apartment, and then the process starts all over again. I don't think there's anything specific about CityFHEPS here for this, but this is common.
Just that if a tenant has a subsidy, then they're aligned. They're already in the portfolio of the city or the housing agency to get subsidy, one shots are a little outside of my scope just because I'm not a litigator. I don't handle L&T, but I think someone who is paying their rent without subsidy would have to navigate the bureaucracy a little more to get to that point, perhaps. That's just a thought.
Right. What would happen to all these tenants if the funding dried up and all of a sudden the landlords aren't getting the city's portion of the CityFHEPS? Can't just kick these people out the next morning. How do you think about that?
I think there's a couple ways to think about it. From the tenant perspective, that would be a crisis. We're talking about, I've read 100,000 people in units subsidized by CityFHEPS, far more in Section 8 subsidized housing. Mm-hmm. That would create a political crisis because you remember, you're not just talking about individuals who aren't having their rent paid. You're talking about owners who aren't getting their rent checks, lenders who aren't going to see the owners pay their mortgage. The city might not get property taxes paid or utilities. If this cuts off, what happens to the multifamily housing in New York City, which is a delicate balance, right? And it's financially important and complicated. So I think it would push for a political solution that I'm not in a position to suggest, but there would be the number of people who would be upset would be a coalition far broader than this letter right here.
There you go with that logic, reason, and economic brain of yours. But we are in New York City with HSTPA, so you never know. You never know.
You never know.
You never know. This is interesting. Wow. I wanted to ask you more about the augmented CityFHEPS, because that's kind of like a 1B, if you will, right, of CityFHEPS. Can you explain that?
A variant that pays more for folks coming out of the shelter system. And a few times when I referred to CityFHEPS, I use the term a little interchangeably, but it often has been the program that pays more than the older CityFHEPS, a little bit more than the older CityFHEPS program.
Why was that just juiced? It was like a 6-month window or something, right?
It was a short window. I think the augmented part was to get more adoption of the program, that if the city would pay a higher subsidy, it would incentivize owners affirmatively putting more units into the program. And part of what's happened to get folks into apartments with CityFHEPS subsidy has been that the New York HPD and HDC marketing handbook has been tweaked over the years to say, well, if you marketed affordable units and you couldn't fill all your affordable units, then before we'll let you remarket an affordable unit, let's just say 130% AMI unit, you may have to give some of those to folks that are coming out of the shelter system with subsidies, right? And so it was sort of intended, and I think it came about during COVID when the circumstances where housing was, I don't know about more important, but it was a very intense time that the city wanted to take care of folks and get people out of shelters as much as possible, that the augmented subsidy and the changes to the marketing handbook were intended to say, look, you're going to do it. If you don't fill all your units on your own, you're going to have to give some of these to homeless referrals, and you'll get subsidy, and you'll get a subsidy so that it won't cost you anything for the most part. And that's been tweaked, but it was a combination of a carrot and a stick.
Yeah. Interesting. I asked you what happens if this program just disappears, poof, overnight and it goes away. What's interesting is that you made a good point. Well, what are you going to do with all these people? You're going to have everyone up in arms. It's a mutual dependency that was created here, right? The tenants get maybe hooked on somebody paying their rent, and the city all of a sudden is now hooked on, well, we can't just kick these people out if we don't find the money to pay for their housing. So politically speaking, you're kind of handcuffed here. You have to keep funding it one way or the other, or massage the numbers or figure it out, like where people aren't getting kicked out. But what occurs to me from a cost and budgeting perspective is that the rents that CityFHEPS pays are tied basically to Section 8 with rent comp studies, so the market rents. And since you can't build anything in New York, effectively, I'm painting with a broad brush here, the market rents continue to go up. So the Section 8 rents continue to go up. So the cost to fund these programs continues to go up. So everyone is going to be hooked on funding this program. The landlords, because they pay above market. The tenants, because who doesn't want somebody paying for their living? And the city, because what are they going to do? Kick all these people out? And so now all of a sudden you have this doom loop of, we went from 155 million to over $1 billion in 2025.
Right.
That is, I lose track of what's a big number anymore. Is $1 billion a lot? I don't even know anymore.
It's a good question. And particularly with this mayor and the commitment to housing that he was elected on to preserve. He put out a block by block plan that said he wants to preserve 200,000 existing units of housing and build 200,000 more. And all of that takes money, right? It takes money to fix up units, takes money to pay your bill, pay your mortgage. It takes money from an owner's perspective to keep things in good repair and pay your staff and to keep people in housing. And everything's going to be a political choice, but owners need enough money. Owners of multifamily housing need enough revenue. And we talked about HSTPA before we got on the air, right? If rent can't keep up with expenses, revenue can't keep up with expenses, housing will be in worse condition because the owner can't devote as much money to something that, if it's running in the red, to maintain it. So the question of rent subsidy, the question of what can the city do to help multifamily owners and to keep rents affordable, which is the key word. There's a lot of things that, aside from just continuing subsidies, property tax reform, insurance reform, allowing under certain circumstances very low legal rents to be increased, which would be contrary to HSTPA for the most part.
Right. I want to ask you about that.
Sure.
Can you put any of these programs in to a rent-stabilized apartment? If I have a rent-stabilized apartment that's vacant, there's 50,000 allegedly vacant rent-stabilized apartments. It's not a capabilities issue. It's an economics math problem that the real estate industry has that current policymakers can't figure out. But can you put a CityFHEPS tenant in a $500 legal rent apartment and collect $2,000 from CityFHEPS?
You can put a tenant in, but you can't charge more than the legal rent.
Okay.
And there are some programs that would allow you. There was something that New York State did called Section 610 of the Private Housing Finance Law, which was a few years ago. It was an amendment to the Private Housing Finance Law that said if there's a property that's subject to a regulatory agreement, right, for financing or inclusionary housing or land disposition agreement, and it's got a legal rent that's below what the maximum payment standard is. With PHFL 610, if the agency that controlled the regulatory agreement entered into an amendment with the owner, they could say, you, owner, can collect up to the full payment standard, even if it's above the legal rent. And for a while, that was good because it helped the mostly affordable or all affordable properties that were in the asset management portfolio of HPD, HDC, HFA. But it got too expensive and they stopped taking new applications over a year ago.
On the 610. So that was a really short window.
That's right.
That was after the Article 11 program gained popularity, right? Am I mischaracterizing kind of the order of events?
Yeah, Article 11's been around, but because Article 11 of the Private Housing Finance Law is a discretionary property tax exemption that requires support a resolution from the city council, and HPD has to review it, and OMB has to review it and approve it. Article 11 is a possibility for a number of properties if they're willing to be all affordable or at least 2/3 affordable. It's something that even if there's political support and even if there's the physical or financial need for subsidy that the city views, and even if the owner is willing to put the ownership into an HDFC fee position and have all sorts of requirements, it could still take 2 or 3 years at best.
Okay, because a lot of people, I want to just talk about this for another second here. A lot of clients I really started learning about the Article 11 program after HSTPA. Prior to HSTPA, you bought a rent stabilized building, you worked it, and you added some value. Now
Right.
that business model does not exist anymore. So there were early adapters after HSTPA, and they started applying to this Article 11 program. And basically what it did, and you could tell me where I'm wrong here, you sign a regulatory agreement with the city in exchange for a significantly reduced property tax bill. So your property taxes went from whatever they were, typically about 20% of the gross income, to something you negotiate, call it 5% roughly of the gross income, and it stays at 5% of the income.
That's right.
And you would often have to, if you had free market apartments, you would have to re-regulate them. So now every free market apartment is now a rent stabilized apartment. I've heard sometimes people would have to maybe roll back some of the rents. I don't know if that's true or not. That was like kind of what I heard in some of these negotiations.
Because it's discretionary, even though the city has term sheets, there end up being negotiations with the city council member about there's some core requirements, but then there's an analysis of Article 11 is a complete property tax exemption, and then the owner makes a payment in lieu called a shelter rent tax typically. That could be 5% of revenue. It could be a higher percentage. It kind of depends. And there's homeless referrals that are mandatory for a certain percentage of the units. And there are a lot of requirements. And so the owner of a rent stabilized building who's otherwise just been going along, renewing leases at guideline increases, and then HSTPA comes along and they no longer get a vacancy increase when the units turn over.
Right.
They say, well, what can I do? It is something that owners look at. But the city's got to do a physical needs assessment, financial needs assessment. It just depends on, in significant part, whether the asset has options to go free market, to stay free market, like a tax exemption or rent stabilization is ending.
Right.
That would be one conversation. But if a property is already rent stabilized without a way to get out of it, then there's less to discuss.
Yeah, like why am I giving you a property tax break if the building is all rent stabilized and seems fine?
Right.
Where you get into the, I guess, more nuanced part of the conversation is, since most landlords don't really want to overly fund these rent stabilized buildings because of HSTPA, in theory, your violations go up, things get unaccounted for, you're not replacing the boiler when you should, you're kind of just dragging things out. So in theory, more and more buildings should fall into the eligible requirements of physical distress. Hey, we have a capital needs issue.
Right.
This problem probably gets worse.
There are a couple of things going on about that. So one is on the state level in the New York State budget, the J51 program, which is a property tax abatement for renovations, typically for covered work, often involves energy efficiency, insulation, windows, a variety of work. That was extended. It still needs New York City to enact it. It's an enabling law. For example, it's been used mostly by co-ops and condos since it was renewed a few years ago, but we'll see if it actually gets used by many rentals, but that might help with some of the economics. And on the other side is that the city council member Nurse has introduced another version of the Community Opportunity to Purchase Act, saying if you own a building that is on the alternative enforcement program list or one of these other lists, or has an average of 3 violations, or there's a whole list, if this is passed, so this is signed into law and becomes law in New York, it could restrict the ability to sell these properties and give a community opportunity to purchase and slow down the sale process, and potentially have nonprofits JV'd with someone else automatically get a bite at the apple to buy some of these properties.
Yeah. The business plan that these politicians are executing, they're doing it flawlessly.
Oh, yeah.
And let me tell the audience what I mean by that. This is unbelievable. So step 1, HSTPA, remove all incentives for the private industry to purchase rent-regulated housing, drop the values by 30 to 50%, call it, overnight effectively. Step 2, initiate COPA, Community Opportunity to Purchase Act, give nonprofits, tenant organizations first right of refusal to buy the properties from the private industry. But okay, there's nuances in there, like it has to be an AEP or have 3 violations per unit or be coming out of some type of affordable program. Okay, well, how do you put more and more eligible projects in that bucket to give the community the opportunity to purchase the buildings? Well, there, enter block by block the housing proposal. The first thing in this 100+ page document that Mamdani put out, it's not about building buildings. It's not about preserving housing. It's compliance. Literally, the first chapter was compliance. And that there's no way that's a coincidence or an accident. It's compliance. What the city and the Mamdani administration is going to do is they are going to raid these buildings with HPD and DOB and just do violation after violation, fix this, fix that. And if you don't have the money, like most people don't, because either they can't raise it or the expenses are rising faster than the income, therefore the well is drying up, you can't fix the onslaught of violations or you can't get into the apartment. So the violations pick up and accrue. Okay, now you didn't think you were going to be in that bucket. You're now in the COPA bucket. That's the business model.
That's exactly right. That without an ability to have revenue keep up with expenses and keep units in good repair, how do owners of older rent-stabilized properties keep up? I mean, the newer properties, talk to me in a few decades.
Yeah, no, we're talking about the pre-war 100-year-old apartment buildings. Everyone knows somebody who's 90+ years old in their own personal life. These people, their medical bills are bananas. The buildings are the same thing.
That's right. So that is a real concern. It's going to take actual solutions that respect the role of the market, right? Because the city doesn't have enough money to build all the housing it needs, and it doesn't have enough money to fund and preserve housing the way it needs. You have to incentivize owners and lenders to do things that make economic sense. And that's going to take some pragmatism.
Yeah, that runs contrary to the elected officials at the moment.
It isn't really the theme of the rental ripoff hearings, I'll say.
Yeah, well said. Well, if you were, I want to wrap up here, but you guys are like one of the few gold standard real estate firms in New York. You are definitely the go-to in terms of advice and practicality. You're articulating everything that you practice really elegantly and simply. If you were to sit down with Mamdani, just in a hypothetical world, let's put on our imagination hats here for a second, what would you say to him to kind of guide him through CityFHEPS and how to fund programs in a practical way, yet something that he might say yes to?
I would say there's a good example I could use. About 2 years ago, in the New York State budget, there were 2 tax incentive programs passed at the same time, in the same budget, right? One was for 485X, for new construction property tax incentive to replace 421A, and it contains construction wage requirements. Now, this is a state program, but it just illustrates the issue. It was a state program that imposes construction wage requirements on projects as small as 100 units. And at the same exact bill, there was passed the 467M property tax exemption for converting non-residential to residential buildings with the same, roughly the same percentage of affordable units, and it didn't have any construction wage requirements. Why? Because they viewed the problem of vacant Class C office space as an opportunity to solve and incentivize and not to burden with additional costs. Whereas 485X, you're seeing only 99 unit buildings for the most part getting filed for and maybe moving along. On the city level, it's recognizing that you need a true private-public partnership. You need to incentivize the owners of property and the lenders to do something that's going to have a reasonable return, that's going to help make these buildings good quality housing for another long period of time. And demonizing owners isn't the way to do it. You may get elected, but you will not accomplish protecting and preserving housing by just demonizing property owners. There needs to be more public-private partnerships that work.
Yeah, he has an unbelievable opportunity right now to solve the housing issue. He really does. There's 50,000 vacant rent stabilized apartments. The industry is ready, willing, and able to fix them up to highest standards and rent them out to programs like CityFHEPS, Section 8, whoever needs an apartment, the more the merrier.
It just has to make sense.
It just has to make some type of reasonable sense.
Yeah. I have folks I know who track how much NYCHA spends on a renovation of an apartment, and it's measured in hundreds of thousands of dollars per unit. And then the incentives for renovating a rent stabilized apartment, $15,000 worth.
It's ridiculous.
Apartment improvement. It's just not recognizing the reality and the opportunity, as you said. And I hope that he does. Yeah. I hope that there's more pragmatism.
Do you guys ever get called in from lobbyists, policymakers, just to kind of opine on what's happening? We're definitely not getting phone calls for that type of advisory work. I mean, do you guys participate?
I'm not a broker, but I'm active with the Real Estate Board of New York, New York Association for Affordable Housing, NYSAFA, other organizations, many other real estate lawyers. I work with 90 real estate lawyers. We write alerts, we present, we talk to the media. We're part of the ecosystem, and we have our fingers on the pulse of what's going on with New York real estate very well. And I think what you've said is true, that there's a real problem that there are vacant units, and there are more units that are incentivized to become vacant and be left vacant. And what's going to be the solution? Because people desperately need this housing. What is it, 1.4% vacancy rate? Fix it. Don't just put up more violations and not give the owners the economic wherewithal to cure.
Yeah. Just one last thing. The Wall Street Journal broke a story, I think it was before the block by block proposal came out, and it talked about, it was like Mayor Mamdani considers allowing vacancy reset, basically, is what this said. Do you know the article that I'm talking about? So, yeah. And so it came out on a Tuesday morning, and then the next day he had his press conference and he clarified what he meant. We were so close. I'm like, wow, this is a great day. We're getting a vacancy reset. It turns out the vacancy reset only applies to buildings with regulatory agreements. I think that's what it said. So that's the story that the mainstream media is missing. The story is that he understands and effectively acknowledged the problem of these vacant apartments, but is not willing to do anything because they're privately owned.
That's right.
That's the story. Mainstream media, wake up. Why are you not covering this? This is a huge acknowledgement that is completely being ignored here. And to me, that was frustrating and sad. And I hope that common sense prevails. Daniel, what's the best way for people to reach you if they want to reach out and help you solve a problem for them?
Sure. So I'm at the law firm Rosenberg and Estis, rosenbergestis.com, and you can find me on the internet. So
perfect. Thank you for coming. This was really insightful.
Great. A pleasure. Thank you for having me.